I hope everyone's doing well and welcome back to another video. So cool. Today's video is going to be a trade breakdown. Firstly, actually the end of the streak. I don't know, we could call it the end of the streak or not. It really is, but a very small loss today, a controlled loss. I'm hoping before any of you guys watch this video, you would have, maybe if you're coming from my Snapchat, you would have seen what I put up. If you're from Telegram, you would have seen the messages earlier today in the main chat, right? And on top of that, of course, we'll do a midweek outlook. Today is Wednesday. We've had the ADP and it is NFP week, so we'll talk about expectations towards the end. But before we get into the video, guys, all of this content that I produce is for free, right? I know a lot of you guys use this. You find it useful. People are getting funded from this. People are getting payouts. And I love to see that. The only one thing I request is everyone who's watching, if you guys can just keep interacting with the content, just make sure you're liking, commenting, sharing it out, whatever it is. But, there's a lot of different ways to show support. And anytime, anybody who already is, I really, really appreciate it, right? So, cool. As I said, end of the streak is actually the first loss. So we are 8 trades into the year as per my post. So this is the 8th and actually ended up being a very, very small loss, right? So let's get into it. What is the context going into the day first of all? We'll talk about these in a second. I'm going to leave that markup. Might be a little bit messy, but we'll leave that for now, right? Let's imagine today's daily candle did not exist, first of all. Coming from yesterday's daily candle, right? Again, very similar to yesterday's daily bias. If I had to favor a side, and I, had a direction for price, it was always going to be bearish. We were going to target previous daily low, and then potentially lower than that. And this sell side, this daily low became a target eventually in the day as well, right? Now, to sort of start that off, what we actually wanted to see was a move into this fair value gap. So that sort of typical textbook open, high, expand this way, and then close somewhere back in the ring is exactly what we wanted to see. Instead, price pretty much today just opened, just consolidated, just ran one way. So the whole day's delivery, right, especially when we come to our sessions, you guys can see Asia consolidated, but London runs one way. Quite a large move, really, innit? And New York, we expected a bit for a reversal. I'll get into why in a second. But essentially, price ran one way. In that process, it ran this sell side, ran that daily sell side target, and also filled in this gap. There was just a very small area left that was unfilled. And from here, what we actually anticipated, right, on a lower time frame was some potential market maker buy model framework. Now, why was that? When the day has moved so aggressively one way, and it has now taken the sell side targets, but we are still, relatively early in the day, there's only 2 things that I would expect from price. It's either accumulation or a reverse. Me to sort of plot a trade, I wouldn't have been looking for further continuation, again, considering the daily candle at this point has only moved down, only taken sell side, and has hit the sort of most plausible target in terms of sell side, right? But by that I mean, I know we have more sell side targets here, but I would not expect today's daily candle to specifically reach that. Bearing in mind that we just have ADP today. We don't have anything that's too major along the lines of FOMC, NFP and whatnot. Right, so cool. Now, when I talk about this market maker buy model framework, just make it very clear, this is the initial consolidation. We had these sort of small reaccumulations. We expected to see a reversal around news time in New York. From this reversal, we wanted to trade higher towards this fair value gap from where, there was 3 p.m. news. I would have hoped, potentially maybe if we get a reversal this way, we go. But why is my take profit not there is the first thing we'll talk about. Now, I understand that today's daily candle is very bearish. For price to actually hit this fair value gap and complete this market maker buy model, the daily candle would have had to completely flip on its head and turn to here. Now, is that realistic, right? Do we have some sort of driver that can allow that to happen? Not really. So I placed my target, as you guys can see, as New York opened at the previous candle's high, which led into a 4-hour fair value gap. I felt like this was a much more plausible target. If price was going to be bullish, it's definitely hitting this. And even if I wanted to see price continue on down, I was hoping that we would be able to sweep the previous candle and then head lower from there. If you've got a lower time frame, it's this sell side specifically. Sorry, not sell side, buy side that we were targeting. Which the previous 4-hour candle high, we wanted to see a sweep on this. From there, we would have then considered maybe price going to run higher, right? But considering the daily candle, I just wanted to see price take this, and if it reverses from there, then oh well, at least our target would have been, right? So cool. Let's get deeper into the entry. So New York comes, and what we have is actually a sort of weird move in London nudge, a very, curved move. What I'm going to do is just pull up the messages and send it to the chat, just makes it easy to reference. Right, so cool. Spoke about what we focused on. We marked our sell side targets. Sell side targets got smashed. As we came into New York, we spoke about market maker buy model framework. If we can get some displacement this way and a move towards this 4-hour candle high, right? And as usual in the chat, we said framework isn't bad. We want to give it a bit of time, see are we getting any displacement. We knew ADP is at 115, right? Which is this big candle, this nice bullish candle that appeared, right? So how was this trade taken, right? What we said is we want to see bullish displacement. Price has sort of, had what looks like it could be the start for a reversal. If we get another kick up above this high and we start seeing some bullish order flow, right? Essentially a bullish trend, price respecting bullish arrays, then there's a good case to be made that it's going to run this way, right? So cool. What I'm going to do is actually delete these annotations and we'll re-add them in a second. And again, I know this is a little, right, cool. So what can you guys see? Session opens, trades lower, very strong displacement at 115. Right, this is sponsored by the ADP, leaving a fair value gap, which is great. And in the chat, it was mentioned we want to see the 130 macro, very similar to yesterday's trade, come and hit this fair value gap. Right now, the reason I'm going to make it very simple. I'm just going to put the entry there, which is where it was, right? But just showing you guys the realistic side of it, because what I said to everybody was, guys, wait for this fair value gap to get hit. If price starts moving away from this, we can hit it here, meaning manually execute, or you can wait for this buy stop. Buy stop meaning you would have waited for price to take this high and then entered. You've got smaller risk to reward. However, it's just a bit less headache. It's a bit more confirmation, right? The initial trade was from here, but because we said let's let it move away and it moved away quite quick, the entry it ended up being around here. All right, cool. So about there, in the wick of the IOFED candle. So as we enter the trade, we said we want to see, as we enter the trade, we said, we want to see this as a 5-minute IOFED. After the 5-minute IOFED, we anticipate further expansion. What I said to everybody was, okay, look, we've done that. This is great. We've moved away. We've created a breaker structure, taking the previous high. Let's get an early trim on the stop loss. Let's trim the stop loss. Okay, this didn't shave off a crazy amount in the stop loss, right? They shaved off about, if we base it off the point, so this is 98, goes down to about 66. So let's say it shaved off about a third of the stop loss. Not a crazy shave by any means, but the ideology behind it is, look, I've entered the trade, price has clearly displaced this way, it's showing intention of going this way. If price manages to find its way all the way back down to the low of this fair value gap candle, this stop loss is going to get hit anyways, right? If we come to here, it's very likely we've disrespected this fair value gap and we're going to take the stop loss. So we might as well trim it here. This is the new point for validation. We anticipate that this fair value gap candle will hold, right? Then you guys can see price, traded higher, broke away once again. Then we have 1, 2, 3 consecutive candles going higher, and we then take out the next sort of buy side target from the lower time frame, which is actually this target, right? So we take this buy side target, and as we take this buy side target, what I said to the group was, okay, we can cover that swing low now. And you guys can see the number is 21. The initial number was 98. That's essentially showing you if the stop loss here is 100 points or whatever it's called, of DXY, we bring it down to 20. That means we only have about 0.2 R risk on the table, right? So that's why when I marked this trade, you guys would have seen the screenshots outside. It was break even, 0.2. It's not it is a loss, not a massive loss by any means. It's a controlled loss because, as you guys can see, after the stop loss went to this low, we're representing with another line. Stop loss goes to that low. Cool. And then price has moved away, taken that buy side, absolutely reversed on us, smashed through, hit that break even. That's fine. And one thing I'll say is, to an extent, satisfying to see is that it goes and takes the full stop loss. Because when you have these scenarios where you've moved to BE and potentially you might have done it a little too early and then price takes you out and then runs that way, it's extremely frustrating. So if we're being very honest, it's nicer to see it hit the stop loss after the matter rather than, it takes us out and then runs up all the way. Right, as you guys can see, we had 3 p.m. news opened with a crazy gap, absolutely smashed through that sell side. Then after that, there was no delivery. Today was essentially just sideways for all of New York. If we take it from about here, this was where the initial consolidation starts, and the rest of the day is just consolidated. Very sharp move both ways, but that's it. Now, if we go over to Euro USD, so now if we come over to Euro USD, actually we'll go on to Euro GBP quickly. Extremely unfortunate setup, right, for anyone who got a Euro USD. I want you guys to realize we were shorting Euro USD, right? And for the whole of New York, literally from bang on just before we enter, it's a one-way move up, meaning Euro USD was very strong and we were trying to short it, so it already brought extra resistance, made the trade a bit more difficult. Anybody who got in GU would have had a much nicer time, and we'll quickly cover both. Right, the DXY had the basis of the trade, but I just want to show you guys a reality of it. If we take the timings, 8:10, we get that nice high made, right? We start moving away, we get not really an eye offered, but the entry is offered around there. But to show you guys the mirroring setup to the DXY, right? Stop loss was at this high. Entry was about there, roughly about 10 pips, right? Very similar. Like I said to you guys, we didn't get that actual IO fed. We entered as price moved away. And what we were seeing on a higher time frame, right? This had the potential to run for the whole market maker somewhat. This could potentially still happen, right? It can run to these targets, but it could have ran a crazy 5R. But we were being conservative. We knew we want to take that previous sell side target in London over kill zone, and we were looking for a nice 2.7R. So when we had this set up, as you guys can see, price moves away, right? Gives us that displacement through the previous low. As that happened, very similar, I said, first trim, let's trim it here, let's cover the fair value gap candle. And if you undo that, you see the stop loss goes from 9.6 pips to about 5.1. So just about, around the halfway mark. We get a bit of a retracement, then we get that next leg lower. As this next leg occurs, I told everybody, this is where you should go, either break even or just cover this high, cover this candle's high, right? And that high covered was about 2 pips. So as I said, the initial stop loss is about 10 pips. The BE when we get stopped at is actually 2 pips. Very unfortunate. You guys can see price absolutely just flew to that. Keep that time in mind. 905, right? And just took that out. Now, if you had taken the same setup, and I'm only showing you guys this, why it's so important to try to be on the right side of Euro GBP, because it can make your life a lot easier, right? If you had taken the exact same setup on GU, we'll pair up the time. So 8:10, last one high, 8:15 is the value that being created, and 8:30 is the candle we enter on. Let's say we've entered about there. Let's eyeball it. We cover the high. And again, once more, we had that market maker sell model framework. would have been a nice 5R if it was to run all the way. But once again, he just wanted to take that more conservative target, and we had about 3.2R, which is still very, very healthy, right? As you guys can see, GU has actually still run. I was actually in both positions. Let me explain to you why, on one of my accounts at least, the one that's on the leaderboards for my funded effect, because Euro GBP was consolidating and I knew it would have a breakout. It's coming from a consolidation, it's in the kill zone, it's like he's going to break one way. I'm in a position where I can afford to risk a bit more, considering I'm up about 17% on the account, and I know, you know, if I risk a bit more, it's not the end of the world, right? Essentially, I went in with 1% risk on both, so 2% risk total. So 1% on Euro USD, 1% on GBP USD. And this is Euro USD. What I just showed you guys is exactly how I went about it. Stopped that at 0.2, right? GBP USD, you guys can see, what did I say to you? 905, right? That's where EU took the stop loss. Guys, look where GU is relative to that stop loss. Nowhere near. Right? At this point, we had trimmed the stop loss, right? A little bit. Cover this fair value gap. And then after this, I said the next trim should be around the IOFED handle, right? Slash the entry. So for myself, I just put it to break even. And when price got to about this area where EU had taken my stop loss around 905, and I saw GU running a little higher, I just left the trade, because I knew that what I'm possibly seeing here, because we're not getting a very, very clean run after ADP, is either I'm caught in a manipulation and price is about to reverse on me, right? Considering we have a 3 p.m. red news folder, all prices are going to consolidate. And as you guys can see, it just had a bit of a large wick that would have taken me out at break even anyways. And then after that, price just stayed very choppy and consolidated. But, you know, if you were something that was able to hold the trade, you did have this covered, you had the stop loss trimmed, whatnot, you would have either come out with zero or you would have still been in this. And you guys can see, if we look at the opposite on Euro USD, you had the setup. Put it on for you guys. Back, start like this, and you can see Euro USD absolutely obliterated. It's completely different to GU, right? And that's why it's important to pay attention to Euro USD before we get into these setups. Sometimes they're fast moving, but guys, losses happen, right? If I'm being completely transparent with you, in hindsight, when I'm doing my own evaluation, today's price action, when I'm thinking about, would I take this up again? Yes, I would take this up again, right? Absolutely. We had the market maker buy one framework. We were already going for a conservative TP. And given the context that we've been speaking about in the last few trade breakdowns, we were being aggressive with the stop loss shades. And that worked out pretty well. For me, somebody who risked 2%, I've come out with 0. Technically, I've come out break even, because my GU was closed in about 0.2% profit and my EU hit the stop loss for about 0.2, right? Around about. And then for other people, let's assume we only traded GU, you would have probably closed out at break even or in profit. If you only traded EU, if you listened to what I said, then you would have only taken a 0.2, 0.3% loss, which is not a major loss at all, right? If you combine that even with just yesterday's win, 2R, right, and you now minus 0.3R, and let's say you end the week here, you've still got a 1.7R week. That's great. That's perfect. You don't need to do much else from there, if I'm being honest, especially considering the context of this week, right? Where we have NFP coming up, and we have the monetary policy for the pound tomorrow as well in our New York session, unemployment claims to watch out for, right? And then, of course, just as I said, the NFP on the Friday. So let's quickly get rid of some of this. We'll do a quick midweek outlook and our expectations for the remainder of the week. Now, guys, if I am favoring a side, is to go lower, right? I want to see DXY target sell side. I do not think we have a midweek reversal just yet. I know some people might be thinking that because it's a Wednesday, prices move very one way and now it's retracing. Can I believe that a retracement can occur here? Definitely. Right? You could even see something along the lines of, tomorrow comes and tomorrow is super bullish, it completes this market maker buy model, creates a daily bearish order block to then like allow NFP day to come Friday to then expand this. That's a potential scenario in the cards, right? We've moved very, very, again, like as I said, one way for all of the week so far. So retracement is overdue. If that retracement doesn't occur tomorrow, it's likely NFP will trade back into the range before we get some sort of continuation, right? The overall bias, like I said, you guys, this is definitely the target to mark out for the time being. It's the last sort of significant target on the chart before we look for continuation towards lower targets like this. If we can absolutely smash through this target this week, we'll set up the bias to be really easy on coming weeks, especially, right, if we consider how the weekly candle is shaping out. One thing that will be very annoying and depressing for us is if DXY does pump from here and sits anywhere in this range, because this does slightly look like we are starting a consolidation. So I really hope we are not, right? And again, we're not even through the first week of the month, but even just looking at a monthly chart, if I had to favor a side, I would definitely be going for this previous monthly low to get tagged. Whether we get a reversal after this, right, is a different question. If we want to, stay consolidated, but I hope we don't get inside monthly candle. It's only 5 days in, right? Let's just see what happens. US 10-year moving very nice, has smashed through this outside target. I really, really like what I'm seeing on this chart, and I'm hoping DXY can follow suit. This candle, has wicked just slightly above everything else, so I'd like to see this as a accumulation, manipulation, and then a strong move down, right? I want to see once price, finishes this leg of price, if we can get a retracement continuation, that second leg break here be the confirmation for much lower prices at the point builds, and that is what we've been looking for from the start of the year, especially after this buy side sweep. All right, guys. BP. Very undecided candle on the monthly at the moment. Week over with a massive gap. We knew that this fair value gap was going to be pivot for us, but where Euro GBP sits right now, I think it's very likely we are going to see, before we see anything in terms of confirmation, bullish or bearish direction, the first sort of order of priority is that this gap gets filled. There's still an area in this price range that has not been touched at all. If I had to favor a side, it's likely you're going to see accumulation and a manipulation into this gap before distribution, right? Considering there's only 2 days left of the week, I think the possible scenario we can see here, right, pay attention tomorrow specifically, is the monetary policy for the pound is going to be this used as an accumulation, possible manipulation here and distribution this way if the pound is getting stronger and therefore the euro is getting relatively weak, and this pair will be dropping. So that's the main thing to pay attention for tomorrow on this. Bitcoin. I feel like it's a bit pointless doing a Bitcoin midweek outlook sometimes, but this week specifically, especially with how that Monday moved, it's very useful. From a wick like this, sweeping all of the sell side, major move down and a bounce up, I'm anticipating higher prices. I want to see Bitcoin absolutely long from there. I want this to be the low of the week, and I want to see price trade high. 4-hour chart, we can see accumulation, very sharp manipulation, which is great to see, and then very nice displacement back up. I want to see this displacement hold, right? Anyone that is a trader, it's not even a bad range to essentially OTE back to the high, but I want to see Bitcoin moving up from here all the way back to the entire high. Right. Lastly, stocks. Just as we've been saying, not sure why it's been placed like this. It's meant to be all the way to the high, right? But it's moving to expectation right now. And we come on that monthly time frame, spoke about a continued bullish move towards previous monthly high, especially as we come from a candle that swept the previous monthly low. And that's very nicely done here. What we'll see in previous weekly low swept, and a very strong move here. The next obvious target is that current all-time high, which is 6129 roughly, right? Just play towards this. Again, guys, I'm giving you this outlook. These are the sort of expectations for price. If I'm being very honest, we're not really looking to entertain any major setups unless something is super clean tomorrow, and I highly doubt it will be considering NFTs on Friday. Again, always keep the higher time frame context in mind. It's the first week of the month. If we let this play out, if the NFT passes and it gives us very nice displacement one way, it's like you're gonna have very clear expectations and bias for the monthly candle, right? And if that occurs, then your life's a lot easier in terms of trading. But that is it for this trade breakdown. The first loss, unfortunate, but not too unfortunate because it is controlled. And of course, this little midweek outlook / expectations for you guys. As usual, any questions at all, anything I can help with, guys, just drop a message below or drop me a message on Telegram and I'll get back to you.